Okay, hi there guys. Can you hear me loud and clear? I've got a microphone on today rather than the headset. So for some reason my headset refuses to connect to the computer. That's a nice little... Yeah, so just let me... G'day John. Alright, let's rip into it guys. One thing I just noticed was the market's just spiked. We haven't opened just yet, so we might have a stronger open than what we expect, but look at it. This is in the last hour or so. It just took off 9 o'clock. Let me just see the last 5 minutes. This is the Dow, so it's well and truly getting ramped up at the moment. Look at that. That was from 9:15. It's just took off another 139 to another 160 point. I don't know. Yeah, 160 points. The Dow just spiked out of the blue after hours. So, I think pretty much they're well and truly gunning for new highs. To be honest, it looks like it's that way at the moment. They'll probably end up trading through the highs tonight, sometime tonight. It's just going against the grain of the bears. It's really getting pushed up and ramped up session after session. Most of the work on the Dow, if you notice, is being done after hours. I mean, this little rally here was 11 o'clock. No, our time. That rally just happened sort of mostly after hours. We've had rallies here 4 o'clock in the afternoon on the Dow. I just showed you that one, I think, didn't I? 10 o'clock. That was midnight. But there's some action after hours, which is... I'm always kind of suspect of that. They're ramping the overnight markets up, which are a lot thinner than their regular trading hours. And then they're holding on to gains during the session. So the market's obviously going to open up in the US when the Dow, overnight Dow's up 120 points. Obviously the market's going to open up quite strong as well. So what we'll see now is we'll probably see, okay, we spiked on the open too. So you can see we've really flushed out those highs on the opening another, 20 points? Roughly 20 points. I don't know if something's come out. Very unusual at the moment. So if anyone sees some news that's popped up, just let me know. Oh, that's not what I wanted. IG. So I'm just going to try and scan the news a bit, but yeah, stronger open. So we're expecting up at, say, 20 to 25 points. We were. It looks like we're going to get up, that 35 to 40 points on the open as the market spikes up. Yeah, I'm not seeing any news that's really flushed it higher. Oh, okay. It looks like the news which is driving it higher is Trumpy, good old Trumpy, right at the right time. Wednesday tweeted that he will be delaying 250 billion in tariffs on Chinese goods. So I'm assuming that's what's given the market a little run up. I'm assuming that was recent because I haven't seen that pop up just before. But yeah. It looks like what's driven that market higher. Let me just check back a bit more. All right. Yeah, so that's what's driven this market, spiked it up. So it's all news driven at the moment. So it's tough going out there to trade at the moment because it's just news driven. I mean, things like that. If you're shorting the market, you had a great short on bang, you could get turned around on a dime because of some sort of unknown news release that you've seen. So it looks like potentially the market is going to be driven higher by, we've got stimulation. ECB's out tonight, expected, rate cuts, and they're going to put out potentially their bond buying program back on. That's what, the European market's looking at that. We're looking at the US cutting rates, so some stimulation there. Now, Trump overnight has come out and he's on Twitter talking about negative zero interest rates and calling the Fed boneheads for not having rates a lot lower, even down to zero or negative to try to stimulate growth. The problem is they don't need it. They don't really need all these massive rate cuts. The numbers are coming out. Employment is still high. You're at nearly full unemployment. So why do you need to stimulate something when you're in full unemployment or low unemployment? They've also got, so the labour market's quite strong. It continues to be strong. You've got producer prices come out last night, which were quite strong. Better than expected. So although they're on their lows, a lot of inflation's quite low. I don't think it's got to do with the economy as such. It's got to do with trade tariffs. Yet he's happy to play around with trade tariffs and try to bully the Fed into cutting rates when really they're sticking to their mandate, which is good, I think. Maybe cutting rates once or twice. There could be another few on the cards, but not to zero. And if I've got an article, what actually I'll post up here. Just got to find it. This link is, I don't know how big it'll come out. It's worth reading. If anyone's been following a bit on zero negative interest rates and looking at that sort of thing, let's just minimize that, and reading about that, it's been done before. It's actually, Japan got negative interest rates, Europe, Germany, I think, maybe, in Sweden and a few other countries. And there's no evidence that it works, that it actually stimulates the economy like he's talking up. Stimulate the economy, low interest rates, it creates more lending and all that sort of stuff. But the problem is people don't want to be paying on savings. Now, they might hold it back from negative interest rates on savings, as in, if they go negative interest rates, people potentially have to pay to hold their money in the bank. That's going to cause, and the biggest problem there, if people get wind of that, why would you want to leave your money in the bank and have to pay the bank to keep it and then pay charges on top of that? So there is a negative impact where it could have a run on the bank, and that's going to cause massive issues. So yeah, there's all this debate going on why you would want negative interest rates. They've tried it in different countries, and at the moment, there's not one skerrick of evidence that it's working. Potentially, Japan had a different situation. Money went elsewhere. Potentially, what we're looking at now is just purely a FX war, currency war. Everyone wants rates lower to try to stimulate, so we're all fighting in the same direction. Europe, Australia looking to go down to zero, US want it down there, so it's all to stimulate their currency and create a better environment for exports, and potentially, rather than import from overseas, you're trying to get Australia to, stimulate local growth, I guess, because it makes imports a lot more expensive, meaning that people will probably tend to buy Australian, but it makes it a lot better for exports, a lower currency. So potentially there's a currency war going on. And when I was reading into it a bit more, you look at bonds. We're talking about the inverted yield curve, and it's a bad thing, recessions and all that sort of stuff. There's potential that it's actually the economy's, US is not doing too bad. Maybe Europe's slow. They've been slowing down for quite a while. Maybe the bonds have been bought up because it's the only safe place to put assets, cash assets for banks. Even if you're not getting much yield on it, it's better than paying the Reserve Bank to hold your cash. Say Australian banks rather than just leaving it with the Reserve Bank and getting interest on their funds, if they're going to have to pay, they may not generate. This is the problem with negative interest rates. They may not worry about trying to lend it out, and they stay on the safe side, and they just lob it into bonds. So that could be why you're seeing this big run up in bonds, longer-term debt as well. Maybe it's not so much because they're worried about the economy, but maybe more because if they're going to negative interest rates and there's a bit of a currency war going on and try to drive their currency lower with rate cuts, they're just lobbing it into safe haven bonds rather than cash at the bank. I hope that makes sense, guys, but it's worth reading into because that would sort of play into why the market's strong and why it continues to be strong. We've had that sell-off, and it's got bought straight back up. I mean, look at the Dow, straight back up here. Let's go back to the daily. And look at that daily there. That's the all-time highs. You're pretty much, you're about 100, 200 points away from the highs, which is kind of nuts considering the environment for the bears. And that sort of plays into what we just discussed there. Maybe that's what they're looking at. Where else do you put your cash? If there's going to negative interest rates around the globe, where do you put your cash? You put your cash probably in stocks. So it's going to be, if that's the case, we could be seeing higher prices. I don't want to turn flip from being a bull to a bear, but it is worth just bearing that in mind. All right, hope that makes sense, guys. But you can see everything's just, that's ticked off. That's the S&P. That's ticked off, ticked off, ticked off. Gold's just taken a bit of a nosedive. Gold was playing out well. We're expecting it to potentially lift, but again, if there's not so much risk into equities, that's the place to be. Maybe gold's not the place to be, but gold did this before, started getting bought up when equities are going up, and sooner or later we got to sell off into equities as gold continued to high. Maybe it's a precursor to another move. We'll just have to see if gold can bounce around here and lift off this support zone around the 1500 mark on the futures, give or take. It's probably on spot price. It's about 1490 to 1480. So if it holds up here and we get some of the shorts out here just closing out or getting squeezed out, we might get enough of a squeeze to pop up. Look, it could be recession, I'm assuming. Who knows, mate? It really is. The more you read, the sort of more things you find. And one thing that's been concerning me for a bearish point of view is the numbers. The numbers coming out of the US on growth it's not really changing. They're actually quite buoyant. So if there's no tariffs, it's probably quite buoyant for the market and should kick it off. Maybe the market just need to take a bit of a pause. This move down was just a bit of a pause. It wasn't as savage of what we saw back in what was it, September, October? That big thump down there, that's not as savage as that. And see that sort of bounce here, that's been more constructive. So it was getting soaked up. So maybe that pressure was there, but there was a lot of buying just stepping in, going, well, hang on a second. We're not buying up. Bonds are not rallying because of fear. They're more rallying because funds, you got your superannuation funds, all that sort of, where they're going to park their cash. You don't want to, if you're trying to get yield for your clients as a fund manager, why would you put it in the bank if you're going to have to pay? If there's the potential that you're going to have to pay to keep it in the bank, you want to leave it in the bank to earn interest. And if you can't, it's all about yield. If you're leaving it in the bank and paying, you've got negative yield, you're going to put it somewhere where you're at least zero or play maybe positive yield, because net overall, it's a benefit for your results, I guess, for your return. So that could be what's driving this bond market to highs, and I've read that a while ago too, but it wasn't making too much sense. So it's taken a while to sink in, but potentially we'll have to see what happens up. I'm suspecting it's going to blow out through the highs. We just have to wait and see what happens. It is extended up here. You can't really deny that. The S&P is going to be extended on the daily as well, up into all-time highs. Germany's not near the highs. Well, they're getting there. They're up to about 12,650, give or take. They're not far off either. Yeah, that's one good night rally. And UK, they're a long way off. They got Brexit issues, so they got a few things to contend with. But we'll just keep an eye. So just during the day, just keep an eye on gold, keep an eye on the markets, just to see where they're going. Let's just look at the SPY on the 5 minute. Where is that? I've lost it. There we go. So that's, what are we now? 1:10. So I'm assuming because of this little lift, and you got that extra boost from good old Trump talking the markets up after hours. So he's not stupid. He knows there's no liquidity around after hours. He knows the US is going to go, and he knows it'll get ramped up. It's in a positive market, so why not? You're better off saying it now rather than talking it up when there's a lot of liquidity and there's still a lot of bears out there at 11:30 when the market opens. You may get a 40-point rally instead of a 200-point rally. So smart man. So this is a 5 minute chart. You've got the market spiked up. So we've got through, basically cleared out 66.50 on the index. It's holding up at those highs. The SPY is generally holding up because, when it closed around here, we're expecting the ASX to be about 25 up. Open 25 points up. Now you're expecting it 25 plus another, 15 or so. About 40 points up. And it's up, 20 already after 2 minutes. So it's looking quite positive. So we'll just, what have we got? That's the 30 minute chart. I mean, that trend is still up. We had a little correction, higher low. Off she goes. I'm expecting to go straight through 66.60. So they're quite bullish, expected to be bullish today. That momentum is going to kick off, and they're really talking it up. They're really pulling out all stops to talk up the economy. Trump wants his 2020 election on track again. He wasn't doing so well when the market's correcting, so he's pulling out all the stops. That's my pessimistic view anyway. So we'll just see how this plays out in the next 10 minutes or so, but just keep an eye on it. At the moment, you probably want to be biased up, I would say, in this market, but I wouldn't be biased up here. I want to see it settle. I want to see the buyer step in, potentially at a higher low, to see if it can drive up into the close. Otherwise, you're sort of taking those extreme levels. You're going to be trading those extreme levels, which is fine. A lot more difficult, and there's a bit more technique involved in it. But extreme levels mean, okay, what we talked about before, we got inside out and outside in. So when you're talking outside in, you're looking at something like this. Outside in meaning you want to try to get it when momentum stopped, and you're generally looking for it on the SPY anyway. This could just chop around here, as it comes down, and then boom, up we go again, get stretched, chop people out, and then start to pull back. But on a day like today, you've got to question those pullbacks. Is it worth selling into an extended market like that? When it gets a bit choppy, you've got to get a clean setup, and you might have to just sort of pick your entries a bit, as in, sort of you're guessing off the entries rather than the setup, because the pullbacks are not that savage, because the market's buoyant. It's really buoyant at the moment. So just bear that in mind, guys. The momentum, you really got to wait for this momentum to ease. I'm assuming this is going to chop around here and boom up, just depending on what the ASX does. See what, we're up 21 now, so it's only 4 past, so expect this to be up 40 or so, could potentially 50 points on the open. All right, guys, we'll finish up there. I'm back in tomorrow. Tomorrow will probably be about the 9:50 mark, so it's worth reading that article. And just bear that in mind. I don't think going to zero rates is a positive thing. There's no proof that it works, that it stimulates the economy. It could even be the cause. The more they talk it up, it could be the cause of the market just rolling over. But there's so many different factors to sort of, we don't know what funds are doing. I'm just speculating that that's what they're doing, in regards to trying to get yield and all that sort of stuff. So we'll have to see. But either way, happy that we started getting some stocks of late, and we'll see how gold goes. We'll see if gold can hold up. Anyway, guys, have a great day. Good luck. Any questions, send us an email to support@tradesetup.com.au. Chat tomorrow. Bye.